All right.
All right.
Okay, so let me quickly show us something very important. Looking at the market, as it were, and then talking of this movement of this activity. So let's look at the market. I was telling us that this is my own bias for the market and what I was looking at, and when I can have a change of mind in the market. So looking at Bitcoin and what it's actually doing. So not getting any surprise at all that we're going to move in this direction, the way we're moving. Um, so first of all, going to my bias of the market. So let's look at the weekly candlestick. So here is the weekly candlestick for the market, right? So if we're going to, okay, let's go this way. So if you look at it, the weekly, I told us I have a bands of the market, right? I had a bands of the market, all right, at 50 moving average, right? So let me take off all these guys. So our target was to return back to $73,000. And of course, we got a bounce at on weekly time frame, and we got a bounce at 50 moving average. Now, the market will have gone down when we have the first bearish candle below 21 moving average. Okay. So now, but we have this is weekly time frame. And so rather than having a bearish candle close below 50 21 moving average, we have a bullish candle close. So this was the first supposed to be, but this close bullish. And I told us yesterday, for those of you who are on a weekly market update, and I said, you know what? As long as the market remain bullish, all right, above $86,000, then we're going to rally up, right, to probably $97,000. So that's to say, now quite a number of people were saying, let's short the market. I short the market, I made the profit on the shorting, and then I left the short. Okay, so let me just take this. Okay. So here we have. So I can have the market. Okay. Okay, let me just refresh this one. Moment, guys. Good. So let's see the market coming up to 96,000. That's 89 to $96,000 region, right? Yes, I'm not going to be surprised. And now, why? If you look at the RSI, had some kind of bounce here, but for us to continue, I need to cross 7980 region of RSI. Then we can return bullish by that time, breaking out of this region, and that's going to make a lot of sense. So what's the fundamental? Okay, this news to the index. So that's for me for Bitcoin. So we got a very nice bounce, like I said, and then taking out the weekly close of this, that make a lot of sense. So we continue to go up. Now, the next other thing you probably want to check is that, let me take out this RSI. and then put stochastic RSI. So let's close this guy. I listened to a lot of people said, what's it called? I listened to a lot of people says indicator does not work. It all depends on what you are doing with indicator, right? Because I wonder how you will be able to calculate a divergence or get a divergence if you do not use indicator. Because we're looking at divergence between, the volumes movement and at the same time the price movement. And that's what gives you a divergence. Now, so the stochastic RSI, we actually want a beautiful cross, right? This is already signs of we're returning back, right? But I needed this guy to cross this 20 level, both the line, the purple line and the blue line to cross above this point. Once we get that, then our bullish momentum continue at least onto $96,000. Yeah, so most time people don't pay attention because what they've been hearing about the market. When I told us that I was not comfortable at the market up here many months back or last year, and yeah, last year I've been clamoring since December. I was not comfortable the way the market actually closes, the monthly close. It does not really give me a good, nice, view for the market, and that was why we said, be careful. You want to take profit, you can take in order to be safe, and then right. So we had the continuation of the market. So remember what I told us that okay. So the market to continue probably. So looking at $96,000 region, but you needed to battle with 88, 89,000 region, which are key levels, right? If we're able to create a break that, so that means this week we can get to $96,000. You heard me right? Not cast in stone, but that's just to give you an idea of the market and moving on and all of that. So quite a number of people were not prepared for things, and so they get twisted, and that's why we said the market will be crazily volatile, and you want to be careful of how you go about it. Does that make sense? All right. So now let's quickly look at it generally. All right. I'm going to look at the market. What am I supposed to be doing in the market ordinarily? All right. So let's look at what we're going to be doing in the market ordinarily. All right. So now let's go. I'm going to, this one is going to be a training meant for people in our forum, the academy training student. Okay. Academy training student. So this is a point at which we need to want to be conscious and then taking opportunity in this space very seriously. So knowledge is not meant to be displaced. So you can't debase knowledge. Knowledge is crucial to be productive in this space. Knowledge is very crucial. So I'm going to go into a segment of just a summary of part of the segment in our training academy. So which is a knowledge-based segment. Okay. Now talking about trading, and that's exactly what I'm going to be doing. Quickly, I'm going to be sharing my page with you and taking a summary. And it's going to be in three markets. First market, the forex and crypto. That's the futures in crypto, and then forex, which is the currency and commodities index, right? And then we now go into synthetics volatility index. All right. So let me just quickly show us something, and then we go into details. All right, ladies and gentlemen. Okay, ladies and gentlemen, you're welcome. So this is, I call it the executive summary of the market activities. Quickly, we go to daily time frame. Normally, you come to the market. So summary, executive summary, what am I supposed to be doing? I was telling a whole lot of people that I was bullish, right, on these guys since last week. Even the S&P 500, those of you who are trading Forex. So I was bullish on these guys since last week. And I tell you the reason why. And I bought into the market, US 30 and then NAS 100. I was bullish. And so might have my target here, right, to take profit. And we're able to break that. So we continue up move for this. So now going to the trading. So let's take crypto first, either Bitcoin, Ethereum, whichever coins and all of that. So first of all, you're supposed to do, take out all of this so that we can be on the same page. So here is your chart, okay? If you are in our training academy, so here is your chart. Forget all of those drawing you're seeing on this, my chart. First of all, what you want to do, we have said identifying key levels in the market is very, very important for you. Now, so identify key levels in the markets, the very simple thing that you can do to do that. First, you want to go into looking at your market. So forget about indicator first. Indicator just added some, okay, aroma or confirmations. So you use indicator for confluences. First of all, that's very paramount for every beginner or anyone trading to be profitable is to understand the price actions. And of course, it's in the price action. We have mentioned a lot of things, what is in price action. Now, but we said the first thing you have to do is to identify key levels of the market. Now, for me, now this has been formed. This is going to be my sub key levels. Your major key level is your major key level is your daily time frame. So I'm going to use this one as my sub key level. And of course, I'm going to use at this, which is going to be on 4-hour time frame. So because now, but the first thing you want to look at in the market is that, okay, do I have a key level support and resistance? And that's why you, first of all, you want to go into a line chart, and you draw all of those things, and so that to be able to identify the key level. And you take a daily time frame to draw out key level. What the key levels? Point at which market take a reversal, and of course, actually have a stoppage, which is meant an advanced level of support and resistance. Now, if that is gotten, then you can invariably say that this market moving from this key level ought to come down to this key level, which is about $72,400 region, right? So if you want to make it a zone, that's going to be 73,500 region, and for the market to get bounced. But this is happening that the market got back here and has some kind of retracement. We're going to show to you clearly in 4-hour time frame and how the market moved up here and of course was able to cross this major key level and now revolve around that a day before and today the market continued. So you can tell that the market is going to average of $92,000 region, right? Or we have liquidity over here 91,000, then 92,000 region. So how do I go about that? So for instance, first and foremost, I can do what we call a channel. Now I can draw a channel here to find a kind of level of support and resistance. This is like, right? Now, so I'm going to clone this guy and then take this guy over down here, somewhere here, just to find a major point of touch, right? So touch point, the channel, if you can extend it up and all of that. So I'm going to go to 4 hours to find a practical kind of trend, right? Now, if you look at it this now, if you look at it, so let's go here. If you look at this, you're going to find out that this guy had a liquidity here, which is on 4-hour time frame. So what I'm going to have in this point, so you're going to be very, very careful here because this is a liquidity zone. So what will the market do here? So from the week, this is 4-hour time frame liquidity zone. So from the week to the body of the candle, the crater. So this is a liquidity zone. So you want a situation where this guy should continue moving up, breaking these guys and retest this. Then you want to be finding a long positions for this market. You get it now. Now, what I've just done here is a very simple applications. Now, if you want to look at counter trend, look at the counter trend. If I take this here to this point, right? So I need to have at least 2 touch points, something like that. Okay. So let's just take this here. So how this guy, so here we have this is a key level. And the market has moved from yesterday, and that was a very nice one. So you want to watch out for this. Because if this guy is going to break down below this point, then you're expecting it to return back to this key level. Now, if you're able to break above these and retest, then you expect it to go to this key level. But this is liquidity, 4 hours. This is a liquidity, these are liquidity. And of course, this is a low, this is a high, this is a low, this is a high, this is a low, this is a high, this is a low. Now, breakup structure. Now, breakup structure, the body of the candle need to stay above the structure, and then that's going to be a strong breakup structure. Please take note of this. This is a breakout structure. Now here, this is the low. Here, there was a low. This broke this. This is the lower low. And of course, created a high, higher than this that created this low. And then here, we have another low. And you have another high. You have another low. You have another high. You have another low. Now, this high is created, but it needs to stay above this. If not, if you refuse this and return back to this region, then you're going to be selling. So that means for me, Felix, if I need to be selling, I'm going to be looking at this. So looking at short, and of course, going on lower time frame to see a market structure shift. And then I'm going to be shorting the market depending on what you see eventually. Now, shorting to where, and then to look at this point. And if it breaks that, then we're going back to this point. So you can see the variables you are actually drawing right now. Now, can I short now? No. Can I long now? No. So what should I do? I'm waiting for something very important for confirmation and confluences. So most time people don't pay attention to confirmation and confluences. It's very, very bad because you're going to create problem for yourself. You get it? So let's quickly go now. So now we've gotten this and all of that. So where should I enter early than this time or just today, as the case may be? Now let's go to 1 hour. So we're going to see that, of course, we really know that this is an uptrend, right? So, but you can see what I'm pushing across here. Okay. You can see what I'm pushing across here. Let's take up this just a moment.